Hi everyone. Today we're talking about ServiceNow and why their stock price has fallen so much. Yes, it's a big drop. The stock was around $1,170 in January 2025. Now it's around $770. That's almost 50% down. So what is ServiceNow? They make software that helps companies manage their IT departments. Things like tracking computer problems, managing employee requests, and organizing workflows. And the company is doing well, right? They're making money? Yes, that's the strange part. Their business is actually good. They're growing, making profits, and getting new customers. But the stock keeps falling. So why is the stock going down if the business is doing okay? There are three main reasons. First, they announced a big purchase. They want to buy a cybersecurity company called Armis for about $7 billion. And investors don't like that? No, it's a lot of money for a company that's not even making $400 million per year. Plus, cybersecurity is different from what ServiceNow normally does. What's the second reason? AI. There's big worry that artificial intelligence will hurt ServiceNow's business. How would that happen? Well, ServiceNow charges companies based on how many employees use their software. But if AI makes workers more productive, companies might need fewer software licenses. So even if ServiceNow adds AI features, they might lose customers overall? Exactly. One analyst said AI tools might just replace what ServiceNow does entirely. Why pay for ServiceNow if an AI can do the same work? That sounds serious. What's the third reason? The whole software industry is struggling. Salesforce stock is down 40%. Adobe is down 35%. Investors are selling all software stocks, not just ServiceNow. Is there any good news? Actually, yes. Some people think the stock has fallen too much. The company is still growing 20% per year. That's good growth. So maybe it's a buying opportunity? Maybe. The CEO says they're building AI features into their products. If they do this well, the stock could recover. But it's risky? Very risky. If AI really does replace their business, the stock could fall more. If they succeed in adapting to AI, it could go way up. What should investors watch? A few things. First, are customers actually reducing how many licenses they buy? Second, can ServiceNow sell their AI features at higher prices? Third, do the companies they bought actually help the business? What about the CEO? What's he saying? Bill McDermott says they won't buy any more big companies for now. He wants to focus on making their current business work better. Is that good? Probably. Investors want to see results, not more expensive purchases. So what's your overall view? ServiceNow is a good company facing a big challenge. The question is whether they can change fast enough as AI transforms the software industry. It's basically a bet on management? Yes. If you believe they can adapt to AI and keep growing, the current price might be cheap. If you think AI will destroy their business model, stay away. Not an easy decision. No, this is one of those situations where smart people can disagree. The company has advantages, good relationships with customers, money to invest in new technology, and their software is already used by many big companies. But the risks are real too. Absolutely, the $7 billion acquisition worries me, and nobody really knows how AI will change enterprise software over the next few years. So what happens next? We wait and watch. The next earnings reports will be important. We need to see if customers are actually buying less or if ServiceNow can sell enough AI features to make up for it. When will we know if they're succeeding? Probably 6 to 12 months. By then, we'll see clear trends in their customer numbers and revenue growth. Bottom line for investors? If you can handle risk and believe in the company's ability to adapt, there might be opportunity here. If you want something safe and predictable, look elsewhere. Fair enough. Thanks for explaining this. You're welcome. The ServiceNow story shows how quickly things can change in technology. A company can have good earnings, but still see its stock crash if investors worry about the future. That's a good lesson for everyone. Definitely. Always look ahead, not just at today's numbers.